over here. All right, recording's in progress, guys. Perfect. Thanks. Okay.
You got the best assistant.
I have the best assistant. My husband is not my assistant. He's a great assistant. Okay. Hi guys. Welcome to Profit and Loss. I think they called it something really awesome, like running your business like a boss or something, which I think is great. So I am super passionate about being on top of your finances and on top of your money, especially in your business. So this is going to be a little more interactive because otherwise this is going to be super boring for you. So how many of you have a profit and loss statement or know what that even is and or keep track of your expenses at all? Oh yeah, can you guys turn your cameras on if you can? Okay, Maria says she keeps track. Matt, you raised your hand. Does that mean you have a P&L, Matt? Maybe. Anyone have a P&L at all?
I have a P&L with no revenue.
Okay, well, hey, it's a start. Okay, so do we at least track our expenses? Matt?
Yes.
Okay, we track our expenses. Are we tracking them in a personal account or are we tracking them in a separate account? Like a business?
In a spreadsheet, in a Excel spreadsheet.
Okay, anybody else? Do you have a separate account for your business? Doesn't necessarily have to be a business account, but do you have a separate account? Okay. All right, Matt Regan, various accounts just like Bill. Okay, I love that. Okay, so that would be step one. We really want to start there. So when we're talking about profit and loss, we really are talking about the budget model in the MREA, which I'm hoping you guys all have the Millionaire Real Estate Agent Red Book. It looks like this. Yep, everyone has this book? Okay, so if you want to kind of follow along to what I'm saying, it's page 153 in that book is the budget model. I run our entire business based off of the budget model. The main principle of this is that you track your expenses, you track your income. And by tracking these things, I mean, not just like in your head, you're like, oh, hey, I know I like, took my friend to coffee and she's selling her house like that. And it's just in your head, you actually need it like tracked. So budget model is you are tracking your expenses and your revenue. So you are going to lead with your revenue, not with your expenses. So there was this company a few years ago that spent all this money on Super Bowl ads and they hadn't sold a single, I think it was a drink company. This was maybe like 5 or 10 years ago, I don't remember. This drink company, and they ran these like crazy Super Bowl ads for millions of dollars and hadn't sold a single product. That is what we don't want to do. So to bring that back to real estate, that would be you paying for a bunch of lead sources when you haven't actually closed a transaction yet. So that's where we want to get away from. So we want to take a look at what we're spending and make sure that we're leading with the revenue part, not the expenses. Like you don't want to rack up all these expenses when you're not actually generating any revenue yet, right? So lead gen is free. All you have to do is your cell phone, which you probably already pay for your cell phone, not out of your business account, even though you probably should. You can just pick up the phone and call people for free. That's lead gen. Once you have your first few things under contract. So if you're sitting with some, deals under contract, then you start saying, okay, maybe I can leverage out this and spend a little money here. Maybe I can leverage out this and spend a little bit of money here. So once we're at that point where you have some things that you're leveraging, that's where you want to keep track of everything and make sure that those things, we're holding them accountable. So the first thing, we're leading with revenue, not with expenses. And really it boils down to making money before you spend it. Literally the worst thing that you can do is start spending money that you don't have, right? I mean, we're all kind of guilty of it. I think my Starbucks budget is the ideal one there. I just spend my Starbucks money like crazy. But what we want to do is make sure we have some money before we spend it. I know everyone loves that old adage of like, oh, it takes money to make money. In this business, it actually doesn't really. We have other things that we have to pay for, but your cell phone is your lifeline for lead gen. Start here before you start spending money on apps and things to make your life easier. Start there. So lead gen is free to begin with until you get some things under your belt. You don't want to start putting in leverage pieces before you start making that money. So this is going to force you to really start holding your lead gen accountable, which goes into kind of the next portion of the budget model, which is playing red light, green light. So for those of you who have an Excel spreadsheet or you have the account, have you ever gone through your account, like line item by line item, and said, yes, I should pay for this. No, I shouldn't pay for this. Yes, I should. Have you ever done that? No.
No.
Okay, I call it the highlighter rule. We had a coach years ago that told me to print out my account for our business. And she said, get a red highlighter, a yellow highlighter, and a green highlighter. And I went through line by line. I think it was about February when we did this. And I went through, and anything that, so I had found on there was like 2 or 3 apps that I was paying for that we had never really used. And it was one of those recurring payments that was just hitting my account that I didn't realize we were paying for. So in the MREA, they call this red light, green light. And what that really means is that red highlighter means those apps that I wasn't using, those you highlight in red, right? And you say, don't need to pay for this because it's not doing me any good, or I'm spending the money and it's not actually doing anything for me. So Matt, the True, but oh yeah, that's another app. I think that does it for you. It will go through and find your recurring things if I'm not mistaken. Yes. So that's what the red is like. You're going to totally stop spending that money on the reds. And the greens are ones that you are seeing a return on your investment. So anything green, yes, you can keep. So your cell phone bill, definitely keep that because you need your cell phone. Things like that. That's how we're doing this. Then yellow is going to be things that really need like further evaluation. So it's something that you're like, I think I need this and I think I can afford to pay for it, but I really need to look into it and find out if it is giving me the return on my investment that I think it is. And then you can move it into either the red or the green. So those are the ones that we kind of like pull out and extract. And I would say you really need to do this monthly for 2 to 3 months before you really get your expenses under control. They spiral out of control very, very fast, especially as like we're in like the summer months now. So you should have things going. You have things under contract. You've got listings coming up, all this stuff. You need to really start tracking your expenses now. You need to look back and say, okay, have I been paying for things up until now? Because you don't want to end like one of your biggest months ever of closings and then look back and realize, wait a second, I spent all this money on useless stuff that I should have been playing red light, green light. And those were really all red expenses that should have been taken out. And I would have been much more profitable at the end of those months. Because what ends up happening is you just let those expenses go through your profitable months or your supposedly profitable months. And then you end up in your slower months because the real estate market will kind of taper a little bit. We try to insulate ourselves from that, but inevitably, November, December, it gets a little slower than June or July. And all of a sudden you're seeing these expenses that you've been paying since the beginning of the year. So that's why I'm saying, start doing that now and print out your monthly statements, red highlighter, yellow highlighter, green highlighter, go through them and remove anything that you don't need. And maybe there's some things that you need to double down on, like those green expenses that you really need. Like we figured out by doing this that one of our lead sources, we actually were getting a huge return on. And I was like, wait a second, I can actually put double that money in because I saved it, because I pulled all those red expenses out, and all that money that I saved with the red expenses, I'm like, wait a second, I wonder if I put some of that money back into a couple of those green light items and maybe I'll get a better return. And we did. So that's where you want to look at, maybe do we need to double down on those green highlights? Or do we just need to remove the red ones and keep pushing forward? So it's a really good exercise that a coach made us do years ago, that has just been kind of eye-opening. And we sort of do like a self-audit every quarter, really. We definitely check in on our money. You should be in your money every single week. And the best way to do that is to just have time set aside. So I know that every Monday I go through our expenses with our director of ops. We go through expenses, we go through all that stuff. And then I have to present it to Kurt, who's our rainmaker, present it to him in a very, very easy way to understand, where it basically just says how much money's in the account, how much did we spend on each of our line items on our P&L. Are we in the green? Like, are we green? My colors are green and red. So are we in budget? They're green. If not in budget, red. If it's not in budget, I need to have a reason why. And then at the bottom, I have closings for the week, closings for the month, and closings for the week, closings for the month, and any upcoming bills. So anything that like we know we have to pay for the business, maybe it's something that's billed annually that I know is recurring that's coming up next month. So I just make a one-sheeter. It takes me about 10 minutes to do this every single week because I have it, so it's all sorted. So that's one thing that you have to do, is just set aside time to go through these things. And you got to start with the beginning. And the beginning is going through your account. First off, having a separate account, then going through the account, and then starting to categorize each of your things. If for those of you who have a P&L, how did you create the P&L? Is it in Excel? Is it, did you take it from the MREA chart of accounts? Do you have it in an app? Like, who's using what? Anyone?
We're using Google Docs to keep it, so we could share and look at it together.
Got it. Cool. Matt says Excel. Awesome. Anybody else using anything other than that? Okay, those are great options. I love anything that's free. I love that. We did move into, I'm using RE Profit, which is great. But don't everyone go out and get RE Profit, okay? It's $39 a month. Don't do that. You want to use something that's going to be a good return on your investment. I know that I can make that payment every single month because of where we're at in the business. So don't go running out paying for an app. That's what I want to halt you at. Use something that's free. We used Excel for the first 3.5 years of business. I love Excel. It is great. And then you can manipulate it basically the same way. What I want to tell you guys about is Keller Inc. Does anyone know about Keller Inc.? Keller Inc. is where you go and you can get everything from the Red Book, from Hold, from literally, I think the one thing, any of the like printouts or anything involving the books that we talk about at KW all the time, you can get all of the documentation on Keller Inc. And it's just a free download. It's under resources, and you can download the MREA chart of accounts. The chart of accounts is going to show you the categories for your real estate business that you should loosely be using. I use them pretty religiously. I really like the way that they break it down, and I like the way that they break down the expenses. And you do have to keep a ledger. So you need to go through every single month and say, okay, I spent, $10 on a Facebook ad. So that's going to go under lead generation, because that's lead generation. So now I'm going to take that $10, it's going into the lead gen bucket. And then if I spend, next month I spend $20 on lead gen, now I've got $30 in lead gen. You see what I'm saying? So you just categorize each and every single one of those line items every month. And using the MREA chart of accounts is actually going to give you a very clear picture of where your money is going and how you should have it categorized. The other thing that chart of accounts does is it categorizes your income. I like this because at the end of the year, this happened our first year. I looked back and I was like, wait a second, how much of our income was from buyers? How much was from sellers? How much was referral? How much was rental? Like I didn't know. I had just dumped it all into income. And that all of a sudden gave me like, oh, wait a second. I don't know how much of my GCI came from what thing. So I don't know where my lead gen efforts went. Like, did my lead gen help me more with the rentals? I just had a lot of rentals, but I really wanted the sales. Like, do I need to pull? Like, I had no way of actually telling any of that information. So if you are using Excel or anything, definitely break out your income. And by breaking out your income, you're going to know where those things came from. Because if you found out like, okay, I made a lot of money off referrals last year because I sent a ton of referrals out, that's a big thing. Maybe you need to double down on that. Because if you're sending a ton of referrals out to like one place, maybe you work out a situation where you're like, okay, I'm going to spend an hour a week just trying to get my referrals out, or like trying to find people to send out for referrals, because you know that's a good lead source for your business. Referrals are one of the easiest ways to make money, honestly. I mean, you set the appointment and you send them out. I mean, it's pretty simple, and we can do really well with that. We don't get a lot of people moving to New Jersey. It happens. We had a couple this year that we were kind of shocked, but it does happen, but it's not often. So if you want to focus some of your effort on sending referrals out, that's a good way to really build business. But keep track of those things, because if for this year, if you spend a lot of time trying to get referrals out and then you didn't make any referral money this month, maybe that's not a good thing for you to do. Do you see what I'm saying? That's how you have to really hold your dollars accountable. So I guess let's talk about holding your dollars accountable. Who's spending money on leads? Anyone? I am. You guys spend money on leads? Okay.
Well, advertising falls under leads, right?
Yes. Marketing, lead, anything involving lead gen. Are you spending money on that? Do you know what your return is on that investment, or do you know what it should be?
It's zero, because I have no revenue. I'm brand new.
Okay, welcome. So
Thank you.
generally speaking, we are going to want a minimum of a 4 to 5 time return on our investment. So if you invest $100, you want to get a minimum of 4 to 5 times that back. So to me, in my world, that's a good return. If I can get 4 to 5 times my investment, that's a good return. Now, if we're investing a whole lot of money, if it's like $1,000 a month, then I'm going to want like a 6 to 10x return. Like, you just figure out what that threshold is for you. And if it's something that you are going to invest in and you're like, no, if it doesn't give me a 10 times return, then I'm not doing it. So if you're investing $1,000 and you want a $10,000 back, then that's one closing. So you got to figure out, is that $1,000 giving you that money back? That is where keeping track of all of your expenses is going to come into play here, because like, we know our sphere of influence is where 50% of our business comes from. That costs me $0, which means my return on that is infinite, which is great. But if you are going to spend money on leads, you really need to give it 3 to 4 months of steady going before you are going to see that return. Because we know, I mean, a typical closing is somewhere in the ballpark of 30 to 90 days, right? So you don't want to say, oh, I didn't get any business out of 30 days of this lead source, so we're going to get rid of it. You really need to give it 3 months. So if you're going to invest in any sort of lead source, I would say make sure you've got 3 months worth of that. So if it's $1,000 a month, make sure you have $3,000 in your account ready to go for that lead source, and make sure that you know what that return, needs to be in order in 90 days for you to say, yep, we're going to green light this for the rest of the year. So know what those numbers are. So for example, like, one of our biggest lead sources this past year was client referrals. And we spent no money on that other than a little bit of time where we had our team calling past clients asking for business. The return that we have on that is infinite, because it didn't cost me anything. It was just their time. They are calling past clients, and that was a huge lead source for us because we invested in that. But then another lead source that we have, we spend about $1,000 a month for it. But so far this year, so I've spent $5,000 total this year on that lead source, but I've made $60K in GCI. That's a good return. That's a really good return. So that's worth it. So I've greenlit that investment every single month moving forward because I know what that return is. It's very good. Does that make sense to everybody? Like how you really have to look at every single thing. So, and then here's a funny example of something. I paid for a social media app that is $10 a month. And I was about to redline it. And then we started getting some leads through social media. And I was like, all right. So I'm going to keep paying for it. It's $10 a month. Like that's how nitty gritty you have to get. Even, I don't care if your budget is $100 a month or your budget is $100,000 a month for your business. Get it down to $10. If that $10 is not giving you a return, get rid of the $10.
Can I ask you what the social media app is for $10?
Yes, I use Mojo. I know it sounds funny because it's the dialer, but it's not the dialer. Mojo is an app that you can create stories on, and it's actually really awesome. You can it makes really cool like stories. That's really all it does. We keep getting so many direct messages about the stories that to me it's worth it because those DMs are turning into clients. So it's worth it for now. But again, that one I'm giving about 6 months to see if I'm going to redline it yet. But so far it keeps it's in that like yellow category, but then I end up greening it as soon as I get a DM. So just figure out what that looks like for you. But yeah, Mojo, it's MOJO.
And real quick, while I have you, I did Google KW Inc. and nothing comes up.
It's Keller Inc.
Okay.
KELLERI.
I've never heard of it, and I've been with the company like 3 years.
Oh yeah, Keller Inc. It's awesome. I'll drop it in the chat. Or can
Thank you.
Yeah, Keller Inc. is wonderful. There's a direct link for the resources page, so everyone can get to it. And you can download all the things. The MREA chart of accounts is going to be the one that you want to download. It pulls it in as an Excel file. And so I'm not an accountant. Let's start there. I'm not an accountant. I'm not going to tell you how to classify everything for your P&L because that is going to be very different for you and the way that you structure your business, whether it's an LLC, it's an S Corp, there's so many things. So I'm going to let you deal with that with your accountant, but it is a really good launching pad for you to like just start. And it's in an Excel sheet. Here, actually, let me do the screen share so you guys can see it. All right. So can everyone see Millionaire Real Estate Agent chart of accounts?
Yes.
Yeah. Okay.
Yes.
So this is where I said it starts with the income. So listing, sales, they have new construction in here. We don't do a lot of new construction, so I don't tend to have anything in there, but referral income and leasing income. And then they have commercial as well. So if you do anything that's commercial, separate that out. Just because, again, you want to know what these things are at the end of the year. I hate that at the end of the year where you're like panic trying to get everything because your accountant's asking you for all these things that you're like, I don't know, I didn't keep track. So that's why I'm glad we're doing this class now because you're in the middle of the year. You can at least go back. Hopefully it's not too overwhelming to go back to January and at least have only half a year rather than the full year to figure out your taxes. So
can I just ask you a tax question real quick?
Sure.
Some people say that they do their taxes quarterly. Is that true? Like realtors are supposed to do their taxes quarterly?
I will tell you what we do, and then I will tell you what you should do.
Okay, thank you.
We pay quarterly. You should talk to an accountant. I cannot give you advice.
Got it.
We pay
Okay.
quarterly. Yeah.
Okay, thank you.
Yeah, that's like as much information as I can like give you.
Okay, thank you.
Definitely. The biggest thing too with accountants is make sure that your accountant understands real estate. And by real estate, I mean investment real estate, our profit share system. They really need to not just be someone who is used to having a W-2 because we don't have W-2s. You know what I mean? So that would be like definitely interview an accountant and make sure that you are using one that knows real estate, especially if you own property or have property management or anything like that. So that's my advice
Thank you.
because I've been through quite a few of them. We
Okay,
do not have a
thank you.
great one, but yeah, we've been through a few of them. Okay, so here is where cost of sale is really interesting. I want you guys to pay attention to your cost of sale. And a rule of thumb, I like to add as many costs as I can to cost of sale rather than standing fixed costs. I like standing fixed costs per transaction. I don't love them just ongoing, because then if the transaction doesn't close, then I don't pay those costs. So as many things as I can cram into cost of sale, I do. Transaction coordination, we have a great TC through the office that you can use. They are wonderful. We use them, and it is a cost of sale because it is per transaction. So I'm not paying them a standing, however much a month, I'm paying them per transaction. So if it doesn't close, I don't pay. I love that. So anything that you're going to pay out, splits, bonuses, anything that you can add to cost of sale is really going to help you with your profitability, because again, it's not a standing long-term cost. It's fixed on the commission. So I feel like I don't miss that money because it was never mine. When I have to write the check out from my own account, that's when I get like, ooh, like I get that like kind of feeling, because now I know the money is there because it came in and it went directly out from that paycheck, if that makes sense. So that's kind of my thought on the cost of sale. The cool part about this too is they have little notes in here for you. So includes ISA, OSA bonus, lead coordinator, transaction coordinator, anything like that. That's why I really like this chart of accounts, because it's gives you a bunch of little info. Maria, definitely look this up when you get on your computer. Expenses, it lays everything out by category, and you just add in the dollar amounts for each of these things. And you want to update this. I do it every week. I update this every single week for us. And like I said, I make up a little one pager that I can present. If it's just you, make up a one pager, maybe you present it to your family. I mean, whatever makes sense for you, but you want to be in this every single week. Then they have in here your profit share income as well. Put that in because that's important for you to know. So that is what a basic P&L looks like. I love that one. Just like I said, you can just take it and run and just fill it in with your money. You can make a separate tab, keep your ledger of everything. So every transaction you can type it in. If you do it a little more manually to begin with, before your organization gets large to where you need something like an RE Profit or QuickBooks or something like that, I would do it manually, because then you're in the numbers every single week and you really can hold them accountable. That's kind of my main gist on profit and loss. And the biggest thing is just don't spend money you don't have. That's why, again, we talk about cost of sale, everything coming out of that transaction, because that money, the check comes in and that money goes out immediately, rather than me having to pay the money out and then wait for the check. That I don't like. I like when it comes out of the check and it's all clean, nice and easy. But does anyone have questions about Matt, except when you're flipping a house? Yes, that's a whole nother class, which we could talk about expenses on flipping homes. We've done quite a few of them where we close on Friday on our next flip. So yeah, questions for me. What do you guys want to know? Where are you having trouble? Is it just doing it? What do you guys need? Anything? Maria, you got anything?
No, just that when I start doing stuff like this with my finances, it takes me a long time, and then I put it aside to do something else, and I never go back to it.
Okay, Maria just said when it comes to finances, she tends to do it and then put it aside and then not touch it again. So that's why I really like the one sheet situation. If I wasn't in business with my husband, what I would do is I would take my finances every single week for the business and I would make up a one pager. You don't have to, it doesn't have to be complicated. Just how much is in the account? Are you on budget? Are you not on budget? First off, make a budget. That would be step one. Go through that chart of accounts, make a monthly budget. Start there. You don't need to make the full year's budget. Just make the month's budget. So looking at your last couple months worth of expenses, make a budget for, we're about to go into July, make a budget for July. And then if you need to adjust it and you don't quite get it right until August, that's totally fine, but start with the budget for July. Then you can look at what you're spending and are you on track or not for each of those categories. And then once you have that, then you can start like just create a one pager of how much is in the account. Are you on budget? What's closing this week? What's closing this month? And then you can present it to your family, your spouse, your kids. I mean, you can get everyone involved in it, and it's a good way to hold you accountable for it. And that's, Maria, that's kind of how we started doing it, because I was having a hard time getting Kurt to look at the dollars with me, because it was a lot. If you overwhelm people with numbers, it gets to be too much. So start small with 1 month's budget and then go to the chart of accounts, but don't spend too much time on this. I think that's the thing. It's going to take you a little bit up front, but then weekly, it should just be a maintenance thing. It shouldn't be like a total overhaul every single week.
Meg, I have a question. What would you say to, obviously I've had a bit of a crutch having a business partner that can run a P&L in you. But what would you say to somebody like me who, you know, outside of that scenario, removing you from my business equation, looking at a P&L, running these numbers is so not exciting to me. But I'm motivated by the end result. I'm motivated by like the power it has, the tools it has. What would you tell to, you know I see some people on here who do good business. Xavier's on here, Seema, Matt jumped off. Sorry, Matt. But, I think a lot of rainmakers are thinking about the end result. And it's like, what if it's messy if we get there? So from your perspective, what could somebody like who's got my personality type, like what should I be expecting? Because obviously it's going to be painful. It's going to be annoying for me to do, but if I commit to it, what things can I get from that?
So that's why I'm saying start with the budget for 1 month, because I think that's manageable. It's a manageable chunk for someone who does not like to do things like this, because I mean, we're not accountants. We don't love doing this stuff, but if you just start with your month budget, start there. And then it may get to a point that you're like, all right, you know what? $39 a month for a program like QuickBooks or REProfit, or there's a plethora of the like accounting, like ledger running P&L type programs. It might be worth investing the $39 a month into that, because it is a very simple once a week maintenance. You drop it in and it just does it. So that might be a leverage piece that you put in if it's something that you really don't want to do, but you have to do it. You have to do it at some point with the work up front. Start with the first month, because then make your budget for July, start there. And then you're just going to have to audit every week, an hour. Just put 1 hour on your calendar of going through what you spent the week before and categorizing them, and then move on next week. Then at the end of the month, you can look back and see, but by cutting the expenses, you should have leftover in the account. That's really the thing. So I guess we built this, we started off going like paycheck to paycheck to paycheck. And that's when I realized I need to put as much as I can into the cost of sale, because I didn't like paying when I didn't get paid. So that's why I'm saying put as much into cost of sale as you can. But then as you're growing, like we moved to a salary model, not a commission-based model. Like there's so many places that you can take this by just spending an hour. And it literally started with 1 hour a week. So 1 hour a week, we've got the business now to where I know it's profitable. I know exactly how much money it's going to cost me to put a listing in. I know exactly how much a buyer is going to cost me. I know how much my lead sources are costing. I know what the return is. Like, these things because you're looking at it once a week for an hour. And it's really just knowledge. And one of our coaches told me, she said, if you spend an hour a day for just 3 months learning something, she's like, you'll be a full-time expert, like full-blown expert in it. So not that I'm saying spend an hour a week at looking at finances, but like that's the reality is it doesn't take a whole lot to be like an expert at something. And if you just spend an hour a week going through it, clarity is power. That's the old bold law. And I love that one. I feel like it's just been that's kind of been the overarching concept for this year, is just knowing clarity. And if you know exactly where your money is going, then you know where it's not going, and you know what's not coming home, and you can really make adjustments because you want money left over. Like, I don't want the $10,000 commission check to come in and me be paying out 8,000 of it and then only left with 2. Like that's not really that fun. So how do we cut down our costs to where that $10,000 comes in and we keep 90% of it? Like, how do we do that? And I think that's what you're trying to get out of it, is more money, right? Because we're all here to make money. I mean, let's be real. We're not here for charity, So until you start holding your money accountable, you won't find it. And I say find it because, I mean, Kurt, how much money we found a lot of money by doing this, like a lot of money. We were like, what? And it was monthly things. I mean, I found like a few $100s a month that I was like, what am I spending this on? And then if you really want to get crazy, go through your personal finances like this with the red, yellow, and green highlighters, and then you really have some fun.
Where would you put coaching costs?
Coaching is its own line item. Maria asked where coaching went. Coaching is its own line item in your coaching/education is its own line item. Yeah, we believe wholeheartedly in coaching and believe our entire team should be in coaching. So that's a large line item for us on our budget. But questions? What else do you guys want to know? What's happening? How are we feeling? Money is not the most exciting topic, especially when you're trying to cut it from your budgets, but.
I have a question. It might be for an accountant, but your advice. If you're new and you have not yet had a transaction, would you recommend starting an LLC to kind of just put everything into that box?
Okay, that's a loaded question for an accountant because, okay, you can open a business account with the LLC. Which we do that. We have an LLC that we open the business account in, but the market center cannot pay an LLC because in the state of New Jersey, an LLC cannot hold a real estate license. So no matter what, the money's funneling through you. So there's really not a whole lot of, there's not a whole lot of liability. Unless you're running a larger team, then that may be a different conversation, but talk to an accountant about what makes the most sense for you and your business. And go from there. We didn't have an LLC until about a year ago.
Okay, thanks.
I'm confused. You just said realtors are not allowed to have an LLC.
No, an LLC is not allowed to hold a real estate license. So like Wood Properties LLC cannot be a licensed realtor because it's not a person. It's an LLC.
That's kind of shocking because I see a lot of things that say, owner is licensed realtor.
Yeah.
But then when I click on the tax record, it's an LLC.
Yes, but the LLC does not hold a real estate license. The LLC itself.
Okay, just the individual.
Yeah, the individual can hold the real estate license, but the LLC cannot in New Jersey. A lot of other states you can, and the market centers can pay the LLCs, but in New Jersey, to my knowledge, you cannot do that. So yes,
Gotcha.
We have a lot of LLCs and we hold real estate licenses, but I can't pay a real estate commission to my LLC. Yeah, therefore commission checks cannot be written to LLCs. Yeah, exactly. Yeah, I know that's why I'm saying talk to an attorney and talk to an accountant about LLCs and those things and what makes the most sense for your business.
Got it.
Any other questions for me about?
I have another question.
Yeah, go.
I don't have an accountant and I know I need one. Do you have a recommendation? You said you've tried quite a few. Is there one that you're really happy with for someone who's beginning?
Yeah, we use Jason Kulari. Kurt, can you put his name in the thing? We really like him. He specializes in real estate. We own quite a lot of property and have property management, flip company, blah. So he does all that, which I really like. I know they're not cheap, I will tell you that. No good accountant is going to be cheap. But I would recommend interviewing a few people and finding someone that works for you.
Great, thank you.
Yeah. Bye, Seema. Yeah. Is everyone gonna like at least get their accounts in order now? Hopefully this inspires you to do that, because at the end of the day, we want some leftover money. And I'm sure you've got some recurring expense that you shouldn't have on your business account. And if you don't have a business account, we're gonna open a checking account or something that you're gonna run your business stuff through, whether it's a business account or a personal one, at least separate, right? We're gonna do that. Yeah, okay. But that's step one. And I will tell you from experience, we did not do that when we first started, and it was a mess, gigantic mess. So please learn from my mistake. We didn't do that. We just ran everything through our personal account, and it was disaster because I had no idea where the money was going. At the end of the year, we were not profitable. I had nothing left. And I'm like, wait a second, we closed transactions and I don't have any money. I don't understand. And then we started really digging in, and that's where I started to really hold every single dollar accountable, because I didn't want to be in that position again. That's the worst. So yeah. Anybody have questions for me? I know this is not like a crazy long class, but no, we all good? Sweet. I know, yes. So Maria just brought up a good point. She said once she starts doing it, she might have questions. If you guys have questions, like while you're doing these things, please feel free to reach out to me. I will do the best I can to answer. Obviously, again, not an accountant, but I will give you what I know and what has worked for us. But yeah, feel free to reach out to me. I'll put my email in here and my phone number. So cool. Well, that's kind of all I have for today. Pretty short and sweet, but yeah. Okay. Well, thanks guys. Enjoy the rest of your day. And again, if you have questions, my info is in the chat box, and give me a call, text, whenever.
Thank you very much. It was very informative. Thank you.
Thank you.
Thank you.
All right. Bye guys.
Thanks.
Hope that was helpful.
Very much. Now, like the path to 7 million, and in that her first thing. Checks.
Ah.
New accounts to have, which is similar to bills. Bills is a little different for companies.